not just fear headlines, but actionable insights as Bitcoin kind of does crumble under this inflation news. This is Bitcoin on the daily chart. We're going to talk about it. We're going to talk about what to anticipate, maybe potentially a game plan as we're navigating through this bear market. Here's the monthly chart. We're actually going to start there on the monthly chart. And before we do, you all know the headlines. Inflation increased 0.4% in September. Consumer prices overall rose 8.2% in the last 12 months, higher than economists' predictions of 8.1%. So predicting 8.1%, here we are left with the 8.2 on this newly updated chart, 8.3 last month. Not too big of a change. Now, this article continues. Increases in the shelter, food, and medical care indexes were the largest contributors. The food index jumped 0.8% over the month, while the energy index fell 2.1%. I don't know about you all, but when I go to a grocery store, it's just like, it's kind of like, what just happened? What happened? The prices are ridiculous at the grocery store. And we go to the grocery store a lot. On the one hand, inflation is high by historical standards, and that's having a negative impact on people's wallets. And I want to touch on this. On the other hand, the employment picture is generally positive. Let's real quick revisit that data to see, is it really that positive? We talked about this in a video the other day. Do job gains signal more inflation? Not coming from wages. Although average hourly earnings have risen 5% over last year, this report doesn't provide data on real wages. Compared to wage data, the report shows an overall 5% annual wage increase. 5% may seem like a big number, but that isn't adjusted for inflation. When you compare the 5% wage increase to an annual CPI increase of 8.3, and that's talking about the recent 8.3, but here we are 8.2. And so maybe it's not that meaningful, right? Maybe it is true. We really need these inflation numbers to cool off before we can start actually trying to find some positive sentiment in all of the other pieces of data that are coming out, because this inflation really, truly does kind of affect everything at a very micro level. So here's Bitcoin on the monthly chart. I want to start here, everybody, and I really do. I want to try and lend, and this is not financial advice, everybody. None of us know what's going to happen next. I'm generally more positive, just whether we're in a bull market or bear market, but I like to prepare. It's not financial advice, but I think it's valuable data, and we take it from historical data. And so here we are. I went ahead, and what I did was I plotted out this previous bear market low to bull market high, back down to the green Fibonacci. I charted that, so we didn't have to chart that in this video. But I also charted the previous cycle, bear market low to bull market high to the Fibonacci. There's that Fibonacci, the last bear market cycle Fibonacci. And then I also went and I charted this. This is this 2013 low, all-time high, back into the 2015 bear market. Here's that Fibonacci, bear market Fibonacci. Notice, and this is the key, Bitcoin falling below the 786 line of the Fibonacci in 2015 to bottom out. Bitcoin in 2018 falling below the 786 line in 2018 to bottom out. So 2015 bottoming out under the 786, 2018 bottoming out under the 786, and here we are now. And by the way, I want to just point this out. Those previous bear market lows, Bitcoin wasn't in this environment where we have all of the things happening that are happening right now, very negative things. And that's very important to note. So I think it doesn't guarantee anything, but I think it increases the likelihood that Bitcoin will see another bottoming out under this 786 line. And though we all sit here and we want Bitcoin to be over in this bear market and we just kind of want it to just start moving to the upside, it's not very realistic, is it? And, you know, we want Bitcoin to kind of, maybe it looks a lot like right here and we're about to just blast off. Again, that's not really realistic, especially as we start introducing actual data points on the chart. 786 line, not yet revisited. So what I want to do is I want to take that thought of that potential downside, and I want to plot it out in a more zoomed in area and just kind of start talking about, well, what kind of approaches can we have in this market right now? Because nobody knows what's going to happen next. It could go any way. We all know that. But like, what's the plan? You know, I think at the core of it all, we better at every given second of every given day have a plan in these markets because they're very volatile. So before we talk about this very important move that you see in green, I want to get this out of the way. We're in this triangle. There is still the case, because Bitcoin is kind of crumbling today under this news. There's a case for a bounce off of this lower trend line of the triangle, and maybe a move back to the upside at the very least to test the 20-day moving average around 19,300, the 50-day moving average right around 19,700. A move like this could be in play. Maybe not tomorrow, maybe not the next day, but just over the coming days, maybe a little bit of a move up to meet these moving averages. That's first off on the very short term. Will there be some type of test of those moving averages? And will Bitcoin break above? And then what's up with this trend line? Can Bitcoin actually make a move to the trend line? So I'm talking about a little bit of upside here because we have to keep it in mind, especially as we're at the apex here of the triangle. So from where Bitcoin is right now to the moving averages, right around 4 to 5%, to the upper trend line, right around 8%. So 4 to 8% move. Is that possible for Bitcoin? Absolutely. We see markets rally all the time after we absorb and digest the inflation data. We see markets rally. It's very much in play for Bitcoin to make a move to the upside. Be prepared for that. Take that possibility into your mind, and any decisions you are making, keep that in mind, right? The upside scenario. And now, if we look at this, and by the way, I should really start with this. A lot of this has to do with how this chart reacts, how traditional markets react. This is the S&P 500. What's going on over here? I mean, we just looked at it on the weekly chart the other day, and check it out. Breaking below the 200-week moving average finally, that move happening. So we talked about the potential 20% move to the downside from yesterday's video, and that's something we need to monitor, but that's what plays into this chart right here, and this is the Bitcoin daily chart that we're talking about. So let's talk about the downside. And again, I'll say this again. We're in a bear market. It's the most wise thing, in my opinion, to anticipate bear market moves. But now it's like, that's fine, but what does that mean, right? Let's look at some numbers. And they're not perfect. They're not exact. But I think this could be a really good starting point for a plan if Bitcoin capitulates and falls. So we've identified, okay, the 786 line right here in yellow, Bitcoin on that monthly chart, it's fallen below in these previous bear markets, right? We've fallen below that line. Well, here it is now. This triangle that we're actually in could be the catalyst for Bitcoin to break down through that line and below. But then it's kind of like, okay, but then what? What happens? Well, I think we've identified, I believe it was 35% is probably the average between the previous times Bitcoin has fallen below. So if we go over here and we can take our price range, check this out. So here's the 786, Bitcoin falling 20 some percent, just over 20%. And then we take our 786 in the 2015 and Bitcoin, a more drastic fall. I can't actually see exactly. Let me get rid of this, move this up. So yeah, right around 47%. So let's just call it around the middle of those two, around 35%. So 35% average of the previous moves if Bitcoin were to do exactly what it did. And that's what's so compelling about this data. With all of the mess going on right now, Bitcoin actually hasn't even done what it's done in previous bear cycles. So whether this negative news is happening or not, the case for Bitcoin to actually continue to capitulate and fall is right there before our eyes. So we take the average of 35%. We say, okay, we obviously don't know that's exact. We don't know that's in play. But then we start saying, well, we do have this triangle, and the target for that triangle is towards the $12,000 area. So now we're really making our way down to this area. That's another data point we introduce. But regardless of that, let's take this macro Fibonacci that we're looking at, the 786, and even this macro, we could call it an opportunity zone, a fear zone. I mean, this is mass capitulation right here, everybody. A fear zone. Let's even dissect that. Let's not call it a broad opportunity zone, and because it's a wide range. But let's dissect it. And this is where we can start taking some action here and planning. And this is not financial advice, everybody, but I think this is a useful tool for me. I'm a visualization person. I'm an organization person. I like things simple to look at. And so we take all of this crazy data that we're talking about through this video, and now we're left with this box. And then we're just like, okay, for me, I'm kind of like, all right, I don't know how I would approach that box, but I kind of segment it, and we take this macro box and we turn it into kind of a more micro-based decision. So maybe we have this first rectangle. We can call this maybe a light buy area. And then if Bitcoin falls in that area, it's like, all right, get some comfort in accumulating in that area, but we're not all in, right? And then the second part of the box, we can call it like a medium buy area in the second part of the box. And then we're kind of like, all right, kind of comfortable with accumulating. And then that third capitulation, if it happens, Bitcoin's like hitting all these targets that we're talking about, these speculative targets. It's kind of like, okay, maybe that's the heavy buy zone. That's just when I'm like, I'm just kind of, I'm buying as much as I possibly can. And again, all of our situations are different, right? The way that we approach accumulation is different. Our financial situations are different. Our income streams and when we get paid money is different. Everything is so different. There's no cookie cutter here. But maybe this could be an approach. It's Bitcoin falling into these areas and you're able to monitor and analyze, well, Bitcoin just fell 10%, 15%. There's a first buy zone. Second buy zone, 20%. Third buy zone, 30+%. In this area where Bitcoin is falling, crypto's falling, we're capitulating, there's fear, S&P, traditional markets, headlines, just everything's a mess. And Bitcoin's doing something like this in these zones, you will have a plan. And that's again, it's just my thought. It's my opinion, everybody. I think it's a good way to approach all of this macro data that we're looking at all the time. One thing I do want to note is this also. We've been watching Truflation, which is on-chain metric data as it applies to inflation rate trends. And it's so interesting to me to watch this because we've already identified this chart kind of topped out in March 2022. And if we go back to this actual CPI data, March 2022, it wasn't topping out yet, the real data, right? We're still months away from that happening in June so far on this chart. So what I've said is this could be very interesting if this serves to be this leading indicator for all of this news that's coming out about inflation. And you see right now, not yet under 7%, but I'm kind of waiting for that to happen. But what I want to note is this. If you go back a year to October of last year, 2021, just above 7%, and then you see this increase, right? So going into December 2021, 10%, and then we're going into January, February, hitting 11%. So December to February, 10 to 11%. And then we go to December, February. So here's December. Look at this, 7%. December, still lagging behind, going up now. Instead of coming down, lagging behind, going up. So that's in December 2021. Then we enter January, 7.5, 7.9 in February. So January and February in the 7s, and on this chart, January and February in the 10 and 11 area, approaching this high here. So this chart kind of acting as a leading indicator a year ago for the CPI data. Now I'm telling you, I would be so intrigued to see if it's a leading indicator on the downtrend. And I'm going to continue watching that because we know we're kind of in this mess for months. We know we got to let this play out. We know we have to let things settle down, right? And then we still have to deal with the rate hikes that are coming again. And this news cycle, it just keeps happening and we have to keep dealing with it. But as all of this kind of just comes to fruition and comes together, we start seeing maybe we will get a leveling off, and maybe that's when markets will turn around. And this could be months in the making of a leading indicator. So those are my thoughts on Bitcoin, where we are right now. We're obviously at a critical area on this triangle. And this is a weekly chart, by the way. We can go to a daily just to kind of get a nice quick glimpse of where we are. Be very careful at the lower end of this triangle. Again, just because we're breaking below the triangle doesn't mean we're falling right into the area. Be careful for pullbacks, maybe even a bounce at the 786 line. Pull back to the triangle, to the trend lines that we see here, right? And these can extend. So just watch all of these things, be prepared, come up with your own plan that you're comfortable with. I hope this data serves valuable to you. I hope you're doing okay out there. I'll see you in the next video. God bless.